Hello traders, the title of the video is Fibonacci Extension Trader explains volume spike. Alright, so what I've been saying to traders is this, that if you are trading in a stock market, if you are trading stocks or stock futures, you must grasp master the volume trading. All right, very important. So I have been posting videos at True for Stock Trader YouTube channel and also at Day Pro Traders YouTube channel. So you may YouTube search, okay, playlist trading volume tips playlist by Day Pro Traders, trading volume okay, playlist by 24 Stock Trader YouTube channel. All right. So here we are. I want to talk about a Fibonacci extension trader explain volume spike. So this is somebody applying the Fibonacci extension at the same time paying attention to the volume spike. Okay, what is taking place? This is what we are about to discuss today, so you may understand it. All right. So some trader may say, George, I already know this, but there are a few things I want to highlight here. So I encourage you to watch the full length of this a short tutorial. Okay. So if the financial instrument goes up from A to B and pull back to point C without going to the beginning, we apply Fibonacci extension. As soon as the price start pulling back here, as soon as it start pulling back here, we apply Fibonacci extension. The level that we want to highlight is the 138.2% or Fibonacci extension level, right? But we want to be aware of the 100% and the median line between the 100% and the 138.2% level. So if you do not understand what I'm be talking about now, it means that you need to go back and watch the video that we titled Magic of a Step-by-Step Fibonacci Extension Trading at Day Pro Traders YouTube channel. All right. Price goes up from A to B, pull back, we apply Fibonacci extension, we highlight the 138.2% level, we draw a line 100% level, we draw the median line between the 138.2% and the 100% level. The reason is if the price breaks above the prior high, the next resistance level is the 138.2% level. But sometimes the price may not go all the way to 138.2% level, but we find a resistance near the median line between the 100% and the 138.2% level. We are looking for a specific candlestick pattern in those areas. The price can break above any of those Fibonacci extension level and continue to go up. But very often we will see a kind of reaction in that zone. But for more detailed explanation of this thing I'm talking about now, watch that video, Magic of Step-by-Step Fibonacci Extension Trading, because we also use a specific trend line. All right. But now talking about the volume, all right. So suppose you were here, so you say, all right, George, let's talk about it. All right, so here it is. It went up from A to B. Here it is. Now it start pulling back. So I'm on the yearly chart. So you may be wondering why am I on the yearly chart. So here I am on the yearly chart. So you will see it on the monthly chart. One currency bar, and then another one start coming out. You say, all right, it start coming down now. So you see it coming down. Probably on the monthly chart or weekly chart, you see it coming down. Now you apply your Fibonacci extension, you highlight the 138.2% level, you draw the 100% and also the median line. You are waiting for it to break above that prior high. Now it breaks above it, you say, all right, the next challenge is 138.2% level. At the same time, you are watching the volume bar. I want to draw your attention to this volume spike here. This is the point of this tutorial today. See that long, okay, volume bar, the red one here. Okay, I'm on a yearly chart. Very interesting. So if you're on a yearly chart, you know that you are dealing with the banks and the hedge funds. So now, suppose you are here. Okay, you are here. And you see it coming to that zone, 50% level. You go to your monthly chart. You see it start coming down. You will see it. You will see. If you even on the quarterly chart, you see. Let's go to the quarterly chart very fast. I want to put a spot there so we don't miss that area. and also place a vertical line there. And then we're going to switch quickly to the quarterly chart. Here we are. So the quarterly chart is here we are. You see one candle sit down and the second one. So it came. Now the reason why I'm laughing is happening all the time. So the CE come down like they want to rally up. So this one is very important for professional. So price will need to go down. It needs to go up fast. They want to sell high. This is this candle here. This is the signal. You see here? That's why I'm laughing. Okay. All right. So here we are. So you see that kind of that volume bar here. This one is corresponding to this one here on the yearly chart. But as we drop to the quarterly chart, you will see what is happening here is that those who want to sell, those who are selling, the sellers want to sell near the 138.2% level. As I've been showing you on the quarterly chart, even on the monthly chart, you see exactly the same thing. So this candlestick bar, if I move my vertical line, you see that candlestick bar here. It got a shadow on the top and got a shadow below. It got a tail also. Then the following candlestick bar is buried with a long tail. Now, the following candlestick bar is very interesting for us because we need to watch it. The long tail is saying the support level. If the support fell, we want to sell. So people are selling here. This is the volume bar, you see here. More than 1.6 billion shares has been transacted in one quarterly candlestick bar, this one. After that rally up, that rally up which is so important, and it slowed it down, 1.6 billion shares has been transacted. That's very bad stuff, okay? So these are professional traders that are selling like that. That's too much. Alright? In fact, this was in 2008, so you may understand why. 2008, the market was bearish. So if we go back again, because I want to stay on the yearly chart, so you may understand clearly what I'm talking about here. Sometime, alright? We know that the first trading activity that we see here, all right, the majority of traders here are bearish traders. They are selling, but they are not only sellers. There is also buyers in that group. How do I know? Because as they are selling here, all right, the price coming down, the price is retesting the prior high here. You see this high here, so we see the price went up to this point, pull back, so prior high here. So some of those sellers may take some of their profits, so they are also part of this group, so they are closing some of their bearish position. It's also a trading activity, and also there are other group of traders that are buying. So we have price going down under a surge in trading volume. That bearish surge in trading volume is also met by a bullish trading activity. Now all combined together is now creating a very long surge in trading volume, long candlestick bar. So it's not only bearish traders here, it's also, okay, there are buyers and sellers here, and also sellers that are closing their position, creating, okay, a surge in trading volume. But you have to understand what I want to highlight here is that talking about Fibonacci extension trader explain volume spike is that very often the volume spike, okay, does not occur anywhere, anyhow. It usually occurs at a specific price that will draw traders' attention. Why? Because this zone, you see, that's what I'm telling you, price breaks above the prior high, they are watching the 138.2% level, and they draw all this line here. This is a hot, a spot, a trading zone. That's why we have that volume spike there. The volume spike does not occur anywhere, anyhow, especially if you see on a yearly chart like this. You know that the smart money is making a decision, but at a specific price in a hot spot trading zone. So the volume spike here is due to those who are. So in fact, you see, some people bought it here, all right? They push it up here. They are also coming out. So the bullish traders that were in this trade were coming out because they know that it's a critical resistance 138.2% level. Those who are die-hard sellers who hate to buy are waiting here for those bullish traders. They join them and they sell. So bullish traders are coming out of the trade. Die-hard sellers are waiting here and they are also selling. You see what's happening here in that volume bar? As the price coming near the top here, conservative sellers come out of their bearish trade because they know there is a support here. Die-hard bullish traders are waiting here to buy. They also join them here. Now we have different group, same group, changing column. So one group was before bearish traders are coming out. By coming out of the bearish trade, they become bullish traders. Bullish traders coming out of their bullish trade are becoming bearish traders. So there are so much going on, creating a trading activity not anywhere but a specific price level at 138.2% level, where we draw all those lines here on the yearly chart. You need to understand it. As a Fibonacci extension trader, you need to understand and read the volume spike here. Now the following volume bar is also a little bit above average. So you may say, George, what is the volume spike? Above average, okay? Here. This one is a 3.4 billion share. Now here on the yearly chart, this is a 4.2 billion share. That's yearly. On 1 year, 4.2 billion share. And this one. So the following year, you can see again we have a surge into the volume, but a little bit lower in comparison to this one here. What has happened? What is happening here? The second one here, we have again sellers that push the price below that prior high. So as people try to buy here, those sellers who sold it here, some of them did not come out when the price was retesting this prior high here. They say, what's going on here? We want it to go down more. So they push it down more. They push it down more. So understand, originally people who sold it here, some of them came out here, but another group, part of that group did not come out. They continue to sell. So they must protect their position because they don't want the price to come back up. So they push it down. They were ordered here to buy again. All right, they were ordered here to buy. So again, this volume spike is also made by buyers. You see, that's why we have the tail. But originally, they were sellers, and the sum of those sellers will come out here, and another group of buyers are waiting here. So it's not all sellers. This candlestick bar, in fact, this one here, all right, this one, all right, you can see that it got a long tail. It did open here, okay, but people push it there, which means those sellers want to sell it again one more time, but as they push it down all the way here, again, they were made by buyers. All right, so you want to understand that surge in trading volume usually occurs in the zone of 138.2% Fibonacci extension level, and you want to know exactly what is taking place. So you may say to me, George, I understand it, okay? So now let's move on one step again, okay? So we apply it from here to here. You see the reaction at 138.2% level, which is this zone. Now it went up again from here to here, yes or no? Let's apply again Fibonacci extension to that move. I'm using this low here, not that this one, this low here, to the top here. We apply Fibonacci extension. Yeah, okay, great stuff. And then what do? As we did before, my friend, we highlight the 138.2% level. So now apply to this move, and we also pay attention to the 100% level, and we know where is the media line. Great stuff, isn't it? So we have again another hot spot trading zone, talking about Fibonacci extension hot spot trading zone. Now let's monitor the volume bar. So price, you see here, this time it hit the 138.2% level, Fibonacci extension level, or this move up. See again the reaction here. Will you agree that the 138.2% level on the yearly chart or any time frame is a very important resistance level? One should give priority to bearish signal below that level and priority to bullish signal above it. So again, if you go to the quarterly chart or monthly chart, you see few candlestick bar alert you that it's going down a little bit more. But the volume bar, look at this one. This is not a surge in trading volume as such. This one. Or it's not a surge, okay? But its average volume, 2.3 billion share has been transacted. This is average volume, normally average, right? Right, a little bit above the normal average. You see, the normal average is 1.3. All right, so you may say, all right, still a little bit, but it's not volume spike for me. Prefer something taller than that. This is a volume spike, yeah, but this one not. Okay, so now we are here. So those are sellers. As you can see, the candles were open here, close below. So there were sellers here. What I was saying to you in relating to the video that I was recommending to you, the magic of step-by-step Fibonacci extension trading. After we see two high, a high and a high, we draw the trend line, and we are monitoring the intersection between that trend line and the 138.2% Fibonacci extension level. That's what has happened here. I talked about it in that video. So sellers responded here and sold Procter and Gamble on the edge of that trend line in a zone of 138.2% Fibonacci extension level. See, that's the zone. Now you see it? So, those are sellers. The activity is in that volume bar here. Now the reason why we did not have a surge in trading volume as such here is because you see the tail here. You have to understand what has happened. Those who sell it, just came out of their trade. So probably the price went fast to retest the moving at 14. And we did not have so much buyers, new traders, joining them here to buy as the price was retesting the moving at 14. Otherwise, we would have had, a surge in trading volume. It looks to me, I may be wrong, all right? If you have any comment, put in the comment section. It looks to me that those who sell it here, as the price quickly come down to the moving average 14 or to a support level, you see the tail here, right? They know there were buyers here before, all right? They quickly close their trade. But no new buyers, no a significant numbers of buyers joined them in this area. So we did not have a surge in trade volume. But the following volume bar, I consider this also a kind of a surge in trade volume. It's well above, almost double the average volume. So we have a 3 billion share. We call it a spike. Why do we have a spike? Now, people are becoming a little bit careful because you remember what I was telling you here. First time, as the bullish trader tried to be a little bit aggressive here, the bearish trader that was selling from the top who did not close their trade pushed them down. They did not forget. They did not forget what has happened here. All right? So they were punished. The buyers that joined the sellers here were punished because they tried to buy here. When the seller pushed them down, you see the price went even below the low of this candlestick bar. So you have to understand what's going through the mind of bullish traders. They are more carefully now. They say, all right, let them do what they want to do, and we will wait. All right. So here it is. Now they join them now. Now they have the buyers coming here. This surge into the volume is now buyers. After the price closed above the prior high, you see here, you see here, they were very, very careful. They say, all right, let them carry on, all right? So, in fact, what has happened here, because I'm on the yearly chart, this is 2015, is closed. We are now in 2016. A new year has begun, all right? So, we are also above this significant high. You see this high here, all right? at 75. So market was bullish, new people coming, new year has begun, also at a good place, a bull, and price did find a support. But you need to be very, very, very careful. Now, you have to see that in 2016, this candlestick bar got a shadow here, which means there was sellers in this zone. This one, 2017, now we are seeing again a shadow in this zone. So, as we need, if one is bullish, one needs to be very careful because you want to pay attention to the level of $90. Be very careful below the $90. If you are bullish, be very careful because this shadow here, now again we are seeing the same shadow in that zone. There were sellers here. It looks like they are hanging around. So if you want to buy, allow it to find a clear cut support above 90 and even above 93. All right. So this is just to explain to you, okay, what is going on, talking about, okay, the volume spike that usually occur in the zone of 138.2% Fibonacci extension level. One thing you need to remember in this tutorial is that the volume spike very often will occur at a hot spot trading zone. For a Fibonacci trader, very often at the key Fibonacci extension level, especially the 138.2% level, or breakout that are occurring above the 161.8% level, or the 261.8% level, or the 361.8% level. You need to be aware that the critical resistance level, you're talking about Fibonacci extension key level, the first one is 138.2% level, and I highly recommend to traders to watch the video that are titled Magic of Step-by-Step Fibonacci Extension Trading when I was analyzing this stock again, instead of using 261, 361, or 238, you just go one step at a time, just highlighting each time. So price goes up from A to B, you apply Fibonacci extension, and all you do care about is 138.2% level, drawing the 138.2, 100%, and the median line. Again, it goes up again from here to here. You do not care about 161, 261. You just apply again Fibonacci extension to this one, and all you do care about is that 138.2% level, 100%, and each median line. Again, right here, as you can see now, so we have done it for this move up, we have done it for this one, and all we do care about is just 138.2% and the median line and 100%. So again, here, you see here, so I will say again, it went up from here to here, and now again, game on. So if it manages to go above that $93.71 resistance level, all we do care about, all right, we don't want to look at any other Fibonacci extension level. We highlight the 138.2% level. You see now? That's there. So let's move the red line there again. And I'll move my orange line to the 100% level. And I just put the median line there again. That's it. All right? So we know that this resistance, $113.98, say 138.2% Fibonacci extension level of this move up. So instead of paying attention to 161.8%, 261.8% level, we're just going one step at a time, highlighting 138.2%, 100%, and the median line. One step at a time. All right? But in this case, we want to, as a Fibonacci extension trader, you want to monitor again the trading volume, the surge in trading volume, try to figure out what is happening when you are looking at the volume bar at the hotspot trading zone, meaning the 138.2% Fibonacci extension level. All right. So this is the end of this tutorial. All right. If you have any question or suggestion, put in the comment section. And of course, I will be recording another video to answer your specific question. If you find this video truly useful, let us know by giving us the thumbs up. If you think that George, well, I'm not very sure about this one, okay, give us the thumbs down. And if you think this is an essential tutorial, feel free to share with your friend, okay, on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders. We're talking about Fibonacci extension trader explains a volume spike. Happy trading to you all and speak to you soon.